Good afternoon, everybody. Welcome to TraderMerlin Show. We are back. It's been 3 weeks. I have a full beard now. Yes, I missed you all as well. So hello, everybody. I have a feeling we'll have to wait a couple of weeks till we get everybody back up to normal speed, because I'm sure some people have moved on to other channels. I get it. For those of you who are new, I may have made some new followers either from my class I taught for Online Trading Academy last week, or I taught had the privilege of teaching but presenting with Larry Jacobson today at UCI. He's running a program called Managing Innovative Teams. So it was kind of fun to do that. So yes, I'm back and I'm tired. I'm exhausted. I drove to Northern California this weekend and back over the weekend. So it's been rough. Bear with me as I get my energy level back up and have some fun. But it should be good. Good time, and I'm glad to get back in the saddle. I miss it. All right, let's just kick things off. Yes, I did go to Hawaii. No, I didn't get suntan. It was overcast and rainy, but I had a good trip, good vacation, as I'm sure many of you are happy to have a vacation from me. But now I'm pulling you back in. Here we go. Let's talk about our markets. Today, I'm really going to talk predominantly about the data coming out this week. There are so many pieces of data that I just decided to call this the data avalanche. I love the graphic here today. It says this week's data avalanche. You got stuff coming in from all over the world this week. Liz says, did you recruit any new followers from your Hawaii trip? No, I am not. I am actually a horrible networker. I'm a terrible social media person, and I may enlist the help of some friends here and try to use social media better, maybe get some more followers, and maybe move this thing up. The needle will never pop without a bigger audience, and I've been told the magic number is 100,000. 100,000 followers, and I could pretty much just do this show, and that might be the way I'm going down the road. So, hello, good to see you. I went to Oahu, or is it Maui? I went to Waikiki. Yeah, Oahu. I went to Waikiki, which I will probably never go back to Waikiki again. I mean, if you want, in my mind, what was a tourist trap and just throw your money away at just overpriced meals, go to Waikiki. Other than that, nice hike up the hill. The Diamond Head's awesome. Of course, going to Pearl Harbor is always one of those events that kind of brings you back down a little bit. It makes you realize what's important and what was sacrificed for the freedoms that we have. So I always enjoy doing that trip. But yeah, I need someplace tropical and cheap. That's where I want to go. Although Nico's on Pier 38, probably the highlight from a food perspective. I did not jump in a volcano. We hiked Diamond Head was the mountain that we did. All right, let's start things off. As I said, data avalanche. And of course, guys, you know the rules. If you have a topic you want me to cover on this show for the rest of the week, you can send it in at TraderMerlin@gmail.com or put it down below any of the YouTube videos. I may start working with an expert in SEO, search engine optimization, maybe get higher rankings on these videos, and maybe bring in some more people. So ask your questions, whatever topics you want. I'm always happy to talk about pretty much every topic possible. You know me. I like to be challenged. Now, speaking of challenging, I did teach a class for Online Trading Academy last week. I will tell you, I love doing it. If anybody here is from that class, welcome. I know we had some people that said they were going to follow the show and were new, but man, I tell you, teaching physical classes in front of people is probably one of my favorite things to do. I give way too much energy, but at the end of the day, I'm exhausted, but I love helping people understand this and conveying all my experiences, knowledge, and hopefully allowing them to get past that learning experience point and right to the point that they want to get to. So that was a lot of fun, but there's a lot of challenges in that one. Yes, so let's do the data thing. I'm dancing around a whole bunch of different issues. I will go to the overall markets, but let's start things off. We technically get the big hits tomorrow with Tuesday's CPI numbers, but you do have a bunch of stuff happening across the pond. You notice that you have tonight, coming out in just a few hours here, the British pound. England coming out with their claiming count chains, average hourly earnings, and their unemployment rate. They're at 4.2% right now. Not a lot of big shock to the system expected, but tonight you could see some movement in that British pound. And if you take a look at that British pound, which I will show you right now, bring up my pound. Where is it? There it is. The British pound has been on this kind of calming ride, if you will. It's had kind of wild fluctuations, and we sold off, and now you're drifting back up, kind of just slowly traversing sideways. A little bit of a pullback here, and again, you're up above that moving average. I think I have this as the 20. let's just check and make sure. I haven't used, I did a little session in the class on moving averages. It might be, it's a 50. So I got the 50 period moving average on there. It's probably much closer to that 20 period moving average. But right now, a little bit of a pullback here in that British pound. I think since Shinobi at Pacific Standard Time. Yeah. It's weird. I'm not sure why they do that, Shinobi. Shinobi is over in England, and yeah, your announcements come out at really bizarre times. It doesn't make sense. I mean, if you look at 11 p.m. California time, I believe you're 8 hours ahead of me right now, Shinobi. So my guess is what, right now it's 10 p.m. for you? Is that 10 or 11? Yeah, I think it's going to be 10 or 11 your time. So there you go. Great move on a lot of stuff. Let me go through the economic announcement because that is the topic, is this week's data avalanche. Now, the claim account change is obviously an important one if you're trading the British pound and living across the pond. So yeah, you're 8 hours ahead of me because it's 2 p.m. right here. So you're 8 hours ahead. All right, the real fireworks start tomorrow, guys. And there's a couple reasons why this is so important. You know, it's not just, hey, we've got consumer price index and producer price index coming out this week. It's not just that. It's the timing of those announcements. So if you think about it, tomorrow we have at 5:30 Pacific, 1 hour before the U.S. markets open in California, we have consumer price index numbers. And here is the expectations for consumer price index. You can see right now they are expecting CPI to stay right where it's at. Looking at this chart, it's kind of interesting. You know, we've been above zero for quite some time, and all of a sudden a big drop down right to zero. They're expecting it to stay there again, meaning that'd be the second consecutive month we've seen no price increases in that basket of goods and services, which to me would be rather surprising. Now, that's the big one. And why is that important? Well, because the next day on Tuesday at 5:30 in the morning, we get the producer price index number. So you got that double whammy, and it's like, well, why is it so important? Is notice what comes out just 5.5 hours after that announcement on Wednesday, right? PPI coming out at 5:30 a.m. and at 11 a.m. you have the Fed funds rate, which right now everyone is expecting to stay at 5.5%. But if there's a shock to the system of CPI or PPI, the expectations may change very quickly. So here's why I think it's so significant. If you look at a normal week when they have an FOMC announcement, it happens on a Wednesday. Always happens on a Wednesday at 11 a.m. Pacific time. But normally the Monday and Tuesday, there's nothing cooking, nothing going on. This time's different. This time you've got a huge piece of inflationary data on Tuesday, and the morning of the announcement, a second piece of inflationary data. So this could be a incredibly wild Wednesday. Keep your eyes on tomorrow's CPI number. Obviously, you're all trading, so it would be important to look at that announcement. But the PPI number on Wednesday morning, right before that announcement, could be a wild one and create a ton of volatility in all asset classes, right? Commodities, the dollar, you name it, that could have a pretty big impact depending on what that rate announcement is, particularly if they do some sort of surprise. Now, let me go and show you the Fed funds futures just to see, are the traders with big money kind of skewing it? Are they going looking a little bit more conservative here? Let's see. What has the statistics said? We are currently at 98.4% probability that the rates are going to stay exactly where they are at. As you notice here, it has increased. It's actually just gotten better. So kind of locking in that 98.4%. I'm pretty sure we'll come out at 98.4%, except unless we get some wild CPI or PPI number. Now, let me look at the PPI here because that one's a little bit different. You can see here, PPI was negative 0.5%, right? That was showing a contraction, deflation of prices for producers, which is great because if producers are saving money because the cost to them is dropping for goods and services to make their products, then that should, in theory, pass on to you and me. Now, I don't know if that's going to be the case. I see people still spending money like crazy. So if I'm a vendor, if I'm a business, and I now save, let's say, 1% on my expenses to build my product, I'm still going to sell it to you at my current price. I don't see the need for me to lower that price yet. Again, we have the power as consumers. If we choose not to buy products and services, then they will lower their prices to us. Hey, thank you, Vaughn. Tom says, I just started doing some search engine optimization. Oh, spend a little money on YouTube ads? All right, maybe I will. Maybe I'll take a few of the bucks that I've gotten from you guys in donations and put that towards YouTube ads. Ideally, I'd get a sponsor down the road. I don't like to run ads. I'd rather not run ads. I'd rather have a sponsor that just gives me enough that I can feel comfortable doing this show without ad revenue, and then I won't have to bother you guys at all. Wages ain't gonna drop. Well, yeah, I agree. It's funny. One of the people in the class, he runs a business. He runs a Mediterranean food and Mediterranean restaurant, I believe, in Oceanside. And he was saying, the biggest challenge for him is employees, getting employees, and it's hard to find good workers. Well, I think those wages may start to increase to attract more workers to some of these jobs. So, again, really key to keep your eye on that unemployment data. And I don't think that they're going to be dropping their prices for goods and services anytime soon. So we started off with have Larry sponsor me. No way. He'll come on the show. That's pretty much it. He'll come on the show. I did not trade on the beach. Margaret, I did almost nothing with regards to the market while I was gone. One thing I was doing was keeping an eye on my silver position, which of course has gone down massively over the past couple weeks. It's great for me. Again, I'm a long-term holder. I'll just sell calls against my position, but I'm actually thinking about selling some more puts on silver. We'll see what happens tomorrow. I already have a very large position in SLV, but I may actually build even more given the fact that, we've gone from 23 down to 20 in a very short window of time. There's a lot of attractive stuff out there. So let's keep on the economic data avalanche. So that's just Wednesday, right? And while this looks amazing, you have so much stuff, that's just really the U.S. That's pretty much all I've talked about so far is U.S. markets, other than the U.K. and their announcements happening later on this evening. You also have GDP number on Tuesday night for England. So you'll look at this number here. You can see that they have not done that great. I will zoom out a little bit and get past their COVID data, which screwed up everybody's charts. But you notice they've kind of been floundering above and below zero, so there is really not a lot of economic growth going on over in England. That's not the best data point for them. We'll see if it comes out at their expectation here. They're thinking it's going to decline and go negative. You can see right here from 0.2% to negative 0.1%. So that'll be an interesting one as well on Tuesday. So that brings us we're obviously at Monday. We go through Tuesday. You've got CPI for the U.S., GDP for the U.K. And then if I look on Wednesday, this is the real firework day, right? You've got CPI for the U.S., you have Fed funds rate, you have FOMC conference. You also have some big announcements for New Zealand, GDP coming out. You have Australia with their unemployment rate and employment change. So huge stuff. And it's funny, when I built the Monday Morning Must-Knows for Online Trading Academy, I'm going through it, I'm like, holy cow, there's still so much more to talk about, because you would think that enough, right? We're done. We've got enough to move these markets and have some big volatility for the remainder of the week. No, you have even more to talk about. And what I like about what happens on Thursday is it moves it away from the U.S. Now, remember, the U.S. sets the stage with their rate announcement on Wednesday. No argument. It is the dog that wags the tail. However, right now, you have 3 other central banks reporting this week. That makes a total of 4 central banks reporting this week. Crazy. You have the Swiss National Bank coming out with their assessment. You can see right here at the top, they're expected to say at 1.75%. And here is their chart. I'll zoom out a little bit more. I can't get too much more data on this one, but you can see that they started raising back in 2022, and now they went from negative 0.75 to 1.75%, and that's their current level. They are expected to hold that path, which would make the 3rd consecutive meeting where they have held. Oh, but wait, there's more. The Bank of England coming out with their rate announcement. That's going to be at 4 a.m. Pacific time. So for Shinobi over there, you had 8 to 12. You're talking midnight. Is that right? No, it's noon. At noon your time on Thursday, you get your rate announcement. And this could also be a major market mover. I mean, the UK chart looks just like ours, right? The Bank of England's been really, really, really aggressively raising rates. They were down at 0. Now they're at 5.25%. Right now, it seems like everybody is playing a keep up with the Joneses type of game, where they're just saying, U.S. is paused, then let us pause as well. So there you go. You got that pause, right? 5.25%. Again, that could create a lot of market waves. And then the interesting part here is they do something a little bit different than the U.S. I actually like this. Thank you, Snow. Yeah, you do. You do have to follow the U.S. But you do is something I like better over there in England than we do. The Bank of England does this thing called the MPC official bank rate votes. You guys can see my cursors on it. And there's 3 numbers here. The first one represents how many think we should raise. The middle one represents how many think we should lower. And the third one represents how many think that things should stay the same. So out of the 9 members, you get a real clear kind consensus, or at least what they're thinking. And right now the expectation is you're going to see a slight shift down with more members saying, let's keep rates the same. They're expecting 2 to stay raised, 0 to lower, and 7 to stay the same. So a slight shift, more of their voting members going towards the pause, if you will. Okay, but I'm still not done. Right, to their neighbors to the west, actually their neighbors all over the place, the EU comes out with their main refinance rate at 5:15 in the morning Pacific time. Again, that will be depending on which country you're in. If you're in France and Spain, that's going to be, 8, 9, 10, 11, 12, 13. That's going to be about 1:15 p.m. If you're in Italy, that's going to be, I believe, 12:15 p.m. So it depends on what time frame you are there. So that's a big one as well. They're staying at 4.5% as their expectations. You can see here, they were stuck at 0 for the longest time, from 2016 all the way to 2022. 6 years of just stuck at 0. Gee, I wonder what caused your inflation, Europe. What could it possibly be? Your money is cheap as heck for 6 years straight. Nobody had to pay any interest on it. Wow, amazing. Then all of a sudden, 2022, they started raising rates aggressively. Now, what I find interesting about this one is the U.S. equity markets started raising much sooner, right? Notice that we saw the Europe raise starting in July of 2022. Let me scroll up here to the U.S. on Wednesday and see when we started raising. They were July of 2022, and we started raising rates back in March. So we have a few months head start on our raises versus what the UK did. Now, personally, I think they got started a little bit late, but hey, that's neither here nor there. So that's where we're at. Swiss National Bank, you got the Bank of England and the EU all reporting rates tomorrow. On Thursday, and you would think that they're going to pause and kind of slow down just for a little bit with their rates, as the rest of the world seems to be doing. Okay, at this point, you're thinking, I got all the data out of the way, Merlin's fine. Oh no, there's more to this avalanche. All right, we've covered news that is going to impact the U.S. over here. We've got news that impacts the U.K. We've got news that's impacting the EU. We got Swiss over here, a little dot on the screen. I don't have too much Asian data or African or Central or South American data. There's usually not a lot of that on our calendars. But I do have more coming out on Friday. Crazy. Yes, I know that there's some Chinese stuff on here, industrial production, retail sales, fixed asset investments, NBS press conference, and their unemployment rate. I just don't trust the Chinese data, so I don't usually quote it. They're expecting their industrial production to surge. All right, so let's go into the final day of the week, which normally Fridays, there's nothing going on. It's real quiet. It's not that case this week. We have a lot of announcements happening yet again. So typically you get the services and manufacturing numbers released, and it's released kind of the same sequence once a month. This time it's a little bit different because A, it's on a Friday, but B, it comes with some other manufacturing data for the U.S. So we get a double piece of manufacturing data on Friday, and it looks like this. As you can see here, at just after the stroke of midnight in in California, we have the French flash manufacturing and services PMI numbers. 15 minutes after that, you have Germany. At 1 a.m. Pacific time, you have the EU reporting. You have the UK reporting at 1:30. So, I mean, this whole block of red is pretty important here. Then I scroll down, and you notice, wow, the U.S. has their own sets of flash manufacturing and service numbers. That's going to happen at 6:45 Pacific time, so 15 minutes into the trading session on Friday. And we have one that starts before the market, which is the Empire State Manufacturing Index. So, what does it all mean? I've got so much information here and a ton of economic announcements. What I know is it's a rough week for me to come back to trading because volatility is going to be all over the place. You're going to see a ton of market movement. My assumption at this point is that Wednesday will be the wild card, and while I believe we're going to stay right at 5.5%, if CPI numbers or PPI numbers come anywhere out of line, then that statement by Jerome Powell could change, particularly the CPI, because we'll have the whole evening to prepare a new set of numbers or announcements. But, right now the markets have priced in, as you saw, to the tune of 98.4% that we're going to stay right where we are at. Yet this new data may steer those markets going forward. In our last rate announcement, we have one more for the rest of the year. Actually, that is the last one for the year. There's the calendar. The next one we're going to have is going to be January 31st. So this will wrap up the year. My guess is they don't want any shocks to the system, so I don't foresee them raising at all. But maybe in the coming months we'll talk more about the shift. As you see here, as I go to these future meetings, there is an increased probability that markets are going to expect a rate cut. And they really start to feel that in the March 20th contract. When you get to this March 20th, there's a 43.8% chance, and when you add it, that we're going to see a rate cut of 25 basis points, pretty close to 50-50. By the time you get to May, there is over 50% chance. It's about a 70% chance right now, actually almost 80, that you're going to see a rate cut of at least 25 basis points, maybe even 50. So quite interesting to see the expectations going forward. Again, I don't put too much stock on these forward-looking numbers, right? By December of next year, December 18th of 2024, they're expecting rates right now to be around 4.25%. That means a 1.5% decrease on rates from now. That could be a big catalyst for our markets. Of course, during an election year, they all want to see something like that. So that might make it very enjoyable for those of you who are bullish next year. Of course, we'll talk about our market forecasts in January, and I'll do my wrap up here. Hey, Chio, good to see you. Thank you. I missed you guys as well. I really did. I have an addiction to doing this show, so here we are. All right, so that's my data avalanche. This is one of the heavier weeks you're going to see in quite some time with regards to data announcements. So there we go. Yeah, John says the bond auction on Tuesday. Nobody wants to buy our debt. Watch that one. Yeah, we can bring that up as well. I think that is an important number. The data I pointed out here is the real obvious, super heavy hitting stuff. But when you scroll up here, you can see we've got different bond auctions. Here's the 30-year bond auction happening on Tuesday. Right now, I'm actually going to see if I can get Bill Addis back on and talk about the results of the bond auction. You had the 10-year today, which we saw those yields go from 4.52 to 4.3. That said, let's segue into our overall markets, and I'll go from there. All right, this is going to be slightly different because the markets have rolled over for bonds, but I will start there. I saw a question come through here from Robert. It said, what happened to BTC? What happened to Bitcoin? Well, what we had is this euphoric run in Bitcoin, right? It's been incredibly bullish for quite some time. Of course, you all know my talk track on it. I believe that we're going to continue on up simply because the spot Bitcoin ETF is going to get approved. Regardless of what Elizabeth Warren pushes Joe Biden to do in his administration, it feels like that is going to get approved. And most of the big fund managers, including BlackRock, Fidelity, believe it's going to happen in Q1 of 2024. I thought we'd see it by the end of the year. Give us that little present. Come on, give it a little present. So, Bitcoin, why did it do what it did? Well, you have the greed factor of it, where a lot of people are trying to jump on this rally. It's funny because more people have contacted me recently asking me what my thoughts are on Bitcoin. It's like, I've been bullish for a long time. I'm not selling until November of 2025. I'm bullish until then. I think that we're going to slowly drift up until April of next year. I think once we get to July of next year, then all of a sudden things will start to go more aggressively parabolic. I think that has a lot to do with the election year, just perfectly times with this 4-year cycle. And then I think we'll go parabolic and get a big move. So what caused that big surge up? Well, optimism. If the markets are expecting that these Bitcoin ETFs are going to get approved, let's say BlackRock. Remember, I made the argument that BlackRock has to buy their Bitcoin from somewhere. They're not getting mine. They're not getting Big Eb's, right? Big Eb's got it on cold storage, so do I. You're not getting my Bitcoin. So they're going to go one of three places. They're going to go to the government. They're going to go to Coinbase and see if they can get some Bitcoin from them. And I think they're actually going to get it from the miners, where they're going to go to the miners and say, hey, we will custodial your Bitcoin. We'll hold it for you and we'll pay you interest on it. So I don't even think that BlackRock is going to own Bitcoin. I think they're just going to hold Mara, Riot Blockchain, or Marathon Blockchain's Bitcoin holdings. They'll hold that, so they have proof of custody. They'll hold those, therefore there's no purchase. So I think that's the weasel way around it that they're probably going to try to work. If not, they've got to go to the open market. And I think that, Shinobi says I'm not getting mine either. Agreed. I'm on cold storage. So I think what you'll see is a slow, continual drift up. This is probably just some profit taking. I think there's a lot of people who believe Bitcoin is going to go down. One of the main reasons you've seen this chart of Bitcoin look like this, which over the weekend, this is from Friday till today, Bitcoin down 8.6%. I mean, that's a monumental drop in one day. The large part of why you saw this huge move up here was people were short Bitcoin and those Bitcoin futures were liquidated. So a lot of people were betting that Bitcoin is going to go down. They're using leverage and those futures got liquidated and that caused a short squeeze. and we saw Bitcoin surge. So I don't really look at this drop today, which obviously impacts my portfolio significantly. I don't look at this as anything detrimental. This to me is just a pause, no big deal. I do expect Bitcoin to keep on going up. Now, if we get a close below 38,000, then I might have a little bit more concern, but I do think that we're fine. I think that this is just a typical pullback. Anyway, you're looking at a big pullback today. It's at $41,035 right now on Bitcoin. Just yesterday you had the future, or on Friday, excuse me, you had that futures market up to a high price of $44,555. If I look at the spot market, which is going to be slightly different. Remember, spot market trades 24 hours, 365, whereas the futures market does not. Here is your Bitcoin chart there, and you can see that Friday's peak for the spot reached 44.7. So 44,729 was your high price, and here we are coming back down now. So I saw from Shinobi says, what happens in November of 2025? If you go to, I need to post it somewhere, but barchart.com asked me to do a video for him, Shinobi, and it really, my hypothesis is all about this 4-year cycle of Bitcoin, which I'm sure that you know about. That cycle ends in November of 2025. That's the final year of the 4-year cycle. And what happens is at the end of the 4-year cycle, Bitcoin falls anywhere between 70 and 85%. So I missed it back in, here, I'll show you the last one. You can see where it fell. But let's go back here and you can see where this peaks. Like, oh, okay, this was 2021. Right in November of 2021, it peaked and then sold off from there. So this 4-year cycle pattern repeats itself over and over and over and over. Yes, then I think the next big 4-year cycle. So here, let me just show you guys real quick. I will put a graphic up here that shows you what 4 years looks like. So here is November of 2021, and I will go back. Oh, hold on. I taught a class and I had to adjust some things. So this is going to look a little bit different here. We'll turn that extend right off, and let's see. That's 1, 2, 3, 4. So that's a 4-year chunk right there. And you guys can see that really started back in December of 2017. It sold off, went down for about a year, year and a half, then started to slowly traverse, and then ultimately after the halving, it exploded and shot to the upside. If I take this box and I move it over to this one, right here is the peak, and you go back to where it started, it's pretty damn close to this peak here, which was December of 2013. I don't know why this is off. It should be right there, right? So it peaked in December of 2013, sold off for about a year and a half. These patterns just start all over again. So to me, that's the interesting part about these asset classes is finding patterns and understanding when these changes happen. How do I capitalize on it? And the fact that it's happened 3 times in a row, I'm willing to put my money where my mouth is on the 4th one. So November of 2025 is when I'll be selling it all. And I think it lines up perfectly with the elections, changing of the political administration here in the U.S. to a more accommodating. Plus, now you're seeing Argentina step into the fray and saying, hey, we're going to be using Bitcoin as legal tender and getting rid of our central bank. So you can see a lot of big changes coming here soon. Tom says, Bitcoin is probably the asset least affected by financial news. I just keep looking at that logarithmic scale all-time chart and see obvious 4-year halving cycle that point to a higher. Yep. Yeah. You're right there. It's certainly going to be impacted by some economic announcements, but I think really it's the political stuff right now that's the major driver of it. And in my opinion, most of the Tom wants the Bitcoin all-time chart and logarithmic. Okay, here's your logarithmic. Oops. Why is it not getting? Oh, this is futures. Let me get out of the futures one and show you the spot price. So when you look at I'll do it on a weekly just because I can fit more data on the screen. Here's your weekly on this bad boy. I get rid of that moving average. Okay. I'll get rid of some of these lines too. When I teach a class, I always do so many lines and got my artwork all over the place. But if I take that and we go here, I don't know why we're on logarithmic. Does it only do logarithmic on daily? Huh. I'm not sure why I'm only not getting it here, Tom. Usually it's right there. It goes logarithmic. Okay. So there's your logarithmic on a daily. Here's your logarithmic on a weekly. Right, there's the 4-year cycle. There's the next 4-year cycle. And now we are in the midst of the 4-year cycle right now, which actually is stronger than historically. It's stronger than it normally is. Hello from lovely Colorado. All right, what else do we have? So we did the economic data. I was running through my top 7, if you will. We're going to go down here to the bottom again. We start off with that Bitcoin, which is pretty ugly. Here is the daily price of gold. Man, I'll tell you, over the past couple weeks, gold has definitely taken a significant pullback. I thought we were going to be trending higher, and all of a sudden, just in the past 6 trading days, from its peak, let me get my snap mode on here. There we go. From its peak that happened on December 4th to where we closed at right now, you're looking at a decline in gold at 7.37%. That's a lot. However, if you look at the one that I'm in, SLV, that percentage is far more substantial. So from peak to where we are right now on silver, you're looking at down 10.53% in just 6 trading sessions. So silver, very volatile. I would not be surprised to see it close this gap. Therefore, I may be selling some puts right around that $20 mark. Who knows? I might even be able to get some of those off tomorrow. Call it at the money. Get him at the money. So that was number 2 on our list, or actually call that number 7 because I have 8 things here. Gold. Right now, I'm looking at this price chart. I'm not panicking on gold. I do think that you are seeing a pullback in it. Obviously, it's a no-brainer. But if you notice, we've been making higher highs and higher lows since this bottom we put in early October. So all in all, I feel okay with it. Get rid of this line here because it's irrelevant. So there is a demand zone coming up. I talked about this in class. I got a demand zone buy point right around 1987 on gold futures, and we may hit that one tomorrow. So looking pretty good. Tom says, I would like a news to static on AM radio. It's noise, not say go. Correct. Remember, unless the news is specifically for Bitcoin. But, if there's, economic news and GDP and CPI and things like that, that doesn't impact Bitcoin that much. I think that there is this rising tide floats all boats types of mentality where if the equity markets do pretty good, you're seeing, crypto rise with that. But why is gold falling at a high speed? Well, we can look at a couple different things. One of them is... You've noticed that this dollar has surged over the past week. Now, it's not a monster increase, but the higher that dollar gets, the less people will buy gold. That's one portion of it. It's you're getting towards that new futures contract rollover. That would make sense. Yep. So at this point, when this dollar index rallies like this, that should put pressure on commodities and equity markets, although we did see positive equity markets out there today. That's part of why that's selling off. And I think that, another factor to it is it's just had a great run. You had a very nice move in silver from these lows that we saw on October 6th to our peak. Silver is up 16%. And that's a pretty substantial gain for, gold is up 16%. That's a pretty substantial gain for a short window of time. So all in all, I think this is just a pullback, a pause, and it's just happening rather quickly. All right, next on the list, the 10-year. I remember we drew this head and shoulders, I think, right as I left. And we were saying, I could definitely hit that lower price point. Personally, I still am in the camp of I think yields are going up. I find it hard to believe that yields are going to keep dropping like this. But, hey, they have been, and our target on this is going to be 3.95%. That's just the break of this head and shoulders pattern that we saw established going all the way back to September 26th, finally breaking on, what day is that, November 14th. Well, still drifting lower. We've had the rally up for 2 trading sessions. We had a shooting star happen today on this one. Right now, a little bit positive in our after-hour session, but I do think longer term, I think we're going up, but we will most likely see it come down and hit this at least the 4% mark going forward. Next, dollar index. We already looked at that one. The trend is your friend. In this case, that intermediate to short-term trend is down. You got lower highs going on with that dollar index. Although we did rally back up, we haven't made a new high. Right? We have not been able to break this 104.50 mark. That's definitely the point that I've gotten in my mind is the line in the sand here. So that said, even though I'm bullish overall on the dollar, I feel like it's going to sell off from current levels unless it breaks 104.50. Crude oil. Boy, this thing's been crazy volatile. I could not have been more wrong on this one. I love hypothesizing about where I think things are going to go. But as I was telling my class this week, I can't push my opinion on the market. I have to do whatever the market does. And at this point, we were talking about, I believe that we're going to see crude oil hit $100 by the end of the year. That probably is not going to happen. We've got these lines drawn in there. Let me zoom out just a hair so we can see them. Right, the red line was my target. The blue line was Goldman Sachs' target. I think it was Goldman Sachs. We talked about that on the show. All in all, it looks like we're going lower. I mean, the trend is your friend till the bend at the end, right, people? And that crude oil chart drifting lower and lower and lower. You know, somebody asked me, well, it's multiple things here. Number one, I was writing articles for Bar Chart a couple weeks back, and my article was going to be all about airline stocks, on why you might want to look at airline stocks because of this chart right here, right? If you look at airlines, one of their major expenses is crude oil. So oil is their big expense, you know, gas, fuel charges. As the more we see crude oil drop, the more energy is dropping overall, and the cost to airlines was going down. So I was going to do this about 2.5 weeks ago. I think I can show you the date of the article when it was first edited. And I just moved on. I did it on something else. I think I did on Walmart. I think I switched to Walmart or maybe some other story. But anyway, if you look at the airline stocks, check out let me see if I have this. Is this the right account? By the way, Black Friday, I did buy the Premier account, but for some reason it's not letting me log into it. So let's look at Southwest Airlines, LUV. Notice those airline stocks have been on a big surge over the past 3 weeks. Since November, really, they've been just rocking and rocking and rocking. And again, I think a large part of that is their energy costs are dropping. That's American Airlines. So this one's going to be a little bit different because of the purchase. You had American Airlines, you had Hawaiian Airlines, which had a big move to the upside. Nope, that's not Hawaiian Airlines. It's so weird. Every time I do that, if I click on stocks, what? Let's go Hawaiian Airlines. It's HA. I got it wrong. If you look at a giant gap up on Hawaiian Airlines, that's because they were purchased. You can see right here. You click on it. U.S. Airlines plans for growth constrained by antitrust concerns. So there is a consolidation going on for some of these airline stocks. So that's Hawaiian. You look at UAL, United Airlines. You know, all of them have a really nice pop. You're talking roughly 30% move off of these lows. Here is the United Airlines one. You're at 24%, and that doesn't even go to the peak there. So all in all, great for airlines. Great for airlines. U.S. positions have been attacked over 80 times. Positions in what, John? What are we talking about? So airlines doing well because of this crude oil chart there at this point. Airlines plus Boeing doing well. Energy is down. Defense activity is up. I'll probably do a bullish spread on Boeing tomorrow. Let's check out Boeing's real quick here. B to the A. Oh, man. Boeing selling planes like hotcakes out there right now. That looks fantastic. I'm not sure why. I'm going to just delete all my artwork here. Okay. Yeah, looking very bullish. You know, and you're coming right up into this kind of untouched land from a long time ago, going back into these highs from March of 2021. You know, after that, the logical piece of we're going to be going back to this high at 344 on Boeing. But yeah, you're coming right back on overhead supply. Talk about a fantastic V price. That is incredible. Right after their earnings have been soaring ever since, nonstop. All right. Yeah, well, I hope that there's some remedy for that, John. Unfortunately, military are always under attack. So that was your crude oil chart. Now it's podium time. Top three for the day anyway. Here's your Russell 2000, which just continues to move to the upside. Although, remember, long-term perspective, where are we at? Long-term perspective, we're right in the middle of that range. Now, this did get moved. We had it sitting here, right? It's sitting right across these lows. I'm trying to snap one. And once we broke that back in October, the end of October, I moved that box down. But all in all, we're still kind of in the middle of that range. So there's nothing great as a supply zone here on crude oil. You have a small supply zone right now, although it's hit it and kind of knifed through that one a little bit. Next one's going to be back up here at 1941 on the Russell. S&P, coming right up to overhead supply on the S&P. I can put a little box right around that bad boy. It's tough when I don't have a lot of screen real estate, but there is your zone. That's not exactly where I would put it, so let me modify this a little bit. All right. You're looking, at least for me anyway, everybody draws their zones differently. I'm looking at about 47.08 to 47.34 is kind of that next area of supply that I'd be interested in and concerned with on the S&P 500. Today, though, up 0.39%. What makes today significant is it's that follow-through. It's third day in a row of up gains, plus we broke through those highs we established back on December 1st and 4th. So all in all, things looking great for the S&P. And then it brings us to the most interesting chart of the day. That is the NASDAQ. So here you have the NASDAQ that's right up into that zone. Now, I can zoom out here. There's also going a little bit further back, but you notice that supply zone that we hit on July 18th and 19th of this year. We are dead smack in it. Looking pretty good right now for potential short opportunity with the stop loss on the triple Qs above 16,567 for those that are triple Q futures, NASDAQ 100 futures. Out of curiosity, is HE a good company to buy stocks? One sec. Let me finish this one here real quick, and then we'll get to that. So notice how different this is. This is why I like looking at multiple things. When we looked at the futures, it was hitting the high from July 19th. You look at the ETF of it, which doesn't have the futures contract rollover issues. Now all of a sudden you're looking at a breach of that, and now the target ends up being that high, right around 400 on the triple Qs would be good. Ni hao ma. All right, let's go to HE. So Hawaiian Electric. Is Hawaiian Electric a good company to buy stocks? So I wrote an article on this one which says I'm not going to touch it. I'm not going to touch this one, and while you can appreciate Hawaiian Electric because obviously it runs the islands, the fires that happened in Maui, there was a lot of not only communication breakdowns, but procedural breakdowns. And right now the finger pointing is going on between so many different parties. Someone's going to get sued. This also happened with PG&E up in Northern California, where they did a bankruptcy because of those fires in Northern California, and that caused significant problems for shareholders of PG&E. So I personally would not touch it. Are they a good company? I don't know. I've never looked at the fundamentals, but let's just face it, they're a monopoly, right? They kind of control the energy for Hawaii. I can't imagine them going anywhere, but I can also see them very easily declaring bankruptcy to wipe away any litigation and to move on from that. So personally, Robert, I wouldn't touch HE. I wouldn't touch it. Just too risky. You look at the price chart here. This may be one for you, Tom. Tom would be like, well, it's just been going sideways between, call it $11 and $15. Okay, play that range. Yeah, Big Eb says Hawaiian Energy will head to bankruptcy soon. Yeah, it all depends what comes out of the investigation. Who's to blame? If HE is to blame for negligence, for shutting off the power and not turning on the early alarm systems, whatever all the lawsuit stuff is, then they'll go bankrupt. They'll declare BK. And shareholders may get something. It depends on what type of bankruptcy they do. If it's a flat-out disappear or it's a restructuring, which PG&E did a restructuring bankruptcy, and shareholders actually got some money. So that was a positive thing for what we saw in the PG&E one from a few years back. Okay, that's my first show back. I'm not doing an hour. I'm exhausted. I need to go relax. Guangzhou, China. Yo, Keem, what are you doing over there, my friend? You're a long way from home, and your Chiefs not looking so good. Oh, by the way, I wonder if somebody here might be able to tell me who's the best team in football. Hold on, let me use my telepathic powers and see if I can help you. Oh, yeah, I don't know. I've got a team in mind. Yeah. Oh, there it is. San Francisco 49ers, the best team in football. Boom! We'll see you in the Super Bowl. Eagles fans, fly, Eagles, fly. 2 consecutive maulings of your team. Oh, I love watching Eagles fans struggle. Shinobi says Minnesota. Minnesota won with 3 points. They beat the Raiders 3-0. That is pretty embarrassing. Thomasina, I would not be celebrating that one. That's embarrassing. Looking forward to seeing the college Wolverines. Yeah, the Minnesota Vikings. That you win with 3 points. That's embarrassing. I mean, great defense, I guess, but your offense is non-existent. You got nothing. Every week it seems like your offense is not there. Anyway, I'll do my sports show another time. So I did your economic calendar, but I will show you just as a rehash of what's happening on Tuesday's session, because here we are at Monday and Tuesday is coming up. You can see we got that core CPI number. Watch that one. That's going to be really, really important. That'll be the mover for the entire day for sure. But the Hawaii utility regulators are nuts. Do not touch. Yeah, I'm with you, William. I'm encouraging everybody, don't touch it. Well, thank you, Lori. I'm going for that suave debonair. You know the most interesting man alive? I've got a long way to go, but I need more gray. I don't always have shows for free at 2 o'clock every day, but when I do, anyway. I will not be getting a Cybertruck. I have zero interest in it. Zero. If you gave me one, I'd happily accept. I would probably sell it. No, I've got my truck. You guys know my truck. I got a Toyota Tacoma, double cab, 4x4. That is my truck. If I were to upgrade, I might go to the Tundra, double cab, 4x4. But I'm a truck guy, so there we go. Yeah, it will be great to watch Michigan, the Tide. I'm actually I'm curious about how Washington does. Should be a good one. Anyway. All right, guys. Well, thank you very much. Your announcements for tomorrow, as I mentioned, is that core PCE or core CPI number coming out tomorrow, 5:30 Pacific time. And if you're trading anything tomorrow night, England, you got your GDP number coming out. That'll be an interesting one as well. So thank you guys so much. I appreciate your patience. Thank you for sticking around through the hiatus. I know some people have left. That's okay. Maybe we'll bring them back at some point. We'll work on getting some new people to this show. But if you have any questions, comments, feedback, things you want me to discuss on the show, guests you want me to have, Tom, you sent me some interesting requests, which I will look into to bring on some options traders. Some of the stuff is above my head. I mean, I'll admit it, but I'm happy to have them on anyway. So keep letting me know about people you want to have on or topics for this show. I will see you all tomorrow. Take care, everybody.